In the past 18 months, global trade patterns have shifted dramatically, with 7 major economies increasing trade with Canada by over 14%, while reducing trade with the US by nearly 10%. This is not a minor fluctuation. It's a multi-billion-dollar redirection of goods and capital, challenging the US's long-standing dominance in North American trade. Germany, Japan, South Korea, India, Brazil, the United Kingdom, and Australia are deepening ties with Canada, often at the expense of their US relationships. We'll explore the policy decisions, economic incentives, and geopolitical factors driving this shift, focusing on data from early 2024 to late 2025. The implications go far beyond import and export numbers, signaling a restructuring of supply chains and raising questions about the US's competitive edge. For Canada, this is both an opportunity and a challenge, requiring rapid adaptation to new demands. This story is about more than numbers. It's about the new contours of global economic power. The 7 nations shifting their trade focus are G20 economies, each with strategic motives. Germany seeks to de-risk supply chains, while Japan and South Korea value Canada's stability and resources as a hedge against regional volatility. Australia and India are leveraging trade agreements and resource synergies, with India also seeking reliable markets for its growing industries. The UK, post-Brexit, is forging new alliances, finding a natural partner in Canada due to shared history and legal systems. Brazil is diversifying its export markets, attracted by Canada's stable, high-value market and fewer protectionist barriers. Collectively, these nations are pursuing predictability and reliability, citing Canada's policy stability and regulatory alignment as key reasons for the pivot. The move away from the US is the result of years of protectionist policies and unpredictable tariffs, which have created uncertainty for international businesses. 65% of firms from these 7 nations cite unpredictable US tariffs as a major concern, prompting them to seek more stable partners. US industrial policies, like the Inflation Reduction Act, have complicated supply chains, making Canada's straightforward agreements more attractive. German and Japanese automakers, for example, now prefer Canada for building North American EV supply chains due to regulatory alignment and access to critical minerals. Regulatory divergence in areas like data privacy and environmental standards adds complexity and cost to US trade, while Canada's frameworks align more closely with global partners. Logistical challenges, port congestion, rail delays, and rising labor costs have further eroded the US's competitive edge. Shipping containers from Asia reach US destinations 30% slower than those routed through Canadian ports and railways. For time-sensitive industries, Canada's logistical efficiency is a compelling reason to reroute trade. The cumulative effect: Canada is now the preferred North American gateway for many global firms. This shift is deliberate, not accidental. Canada's appeal is rooted in its extensive free trade network, offering preferential access to major markets under a stable legal framework. It's a reliable source of critical minerals, meeting high environmental and social standards, crucial for partners like Germany and South Korea. Canada's political and economic stability, transparent regulations, and consistent monetary policy lower business risks. Targeted investments in trade infrastructure, ports, railways, and airports have boosted efficiency and capacity. Projects at Vancouver and Prince Rupert directly address global supply chain needs, reinforcing Canada's role as a commercial hub. These strengths make Canada a magnet for long-term investment and trade. Customs and port data reveal the shift. Vancouver's container traffic from Japan and South Korea is up 17%, while Los Angeles sees a 12% drop in similar goods. Shipping routes from Europe now favor Montreal and Halifax, driven by German exports of machinery and chemicals. Trans-Pacific lanes from Asia and Australia converge on Vancouver and Prince Rupert, providing direct rail access deep into North America. Canada's trade with the 7 nations hit a record $350 billion, with notable increases in industrial machinery and agricultural imports. U.S. trade with these countries, especially in electronics and auto parts, has dropped 11% since early 2024. The shift isn't just about volume. It's about higher value, more sophisticated goods. Pharmaceuticals and medical device imports from the UK and Germany to Canada are up 18%. The data shows a deliberate, high-value realignment of trade through Canada. The automotive sector leads this realignment, with German, Japanese, and South Korean automakers investing in Canadian EV and battery plants. Canada's access to critical minerals and clean energy, plus tariff-free entry to the US and EU, is a major draw. Agribusiness is booming, with Brazil and India expanding agricultural trade and Canadian exports of lentils and peas to India surging. Australian and British firms are investing in Canada's agri-tech sector, creating a two-way flow of innovation. The energy and critical minerals sector is pivotal. Japan and South Korea have signed long-term deals for Canadian nickel, cobalt, and lithium. Nickel concentrate exports to South Korea are up 40% in a year, fueling the EV supply chain. Canada's privacy laws and regulatory alignment have also made it a hub for digital services, with IT exports to the UK and Germany up 15%. These sectors are forging a new, resilient economic partnership. For Canada, the trade surge is boosting GDP and creating jobs in logistics, manufacturing, and resources. But rapid growth strains infrastructure. Ports and railways are nearing capacity, requiring urgent investment to avoid bottlenecks. In the US, the impact is uneven. Port cities like Los Angeles and Seattle see reduced cargo and job slowdowns, while regions vying for foreign investment face stiffer competition from Canada. The shift is reshaping North American supply chains. Many goods entering Canada are destined for US factories and consumers, increasing US reliance on Canadian logistics. The US is becoming a downstream partner in this new dynamic, altering the power balance. Canada's stable policies and trade agreements are giving it a powerful niche, forcing the US to compete more directly for investment and trade. This could spur the US to streamline regulations and upgrade infrastructure to reclaim its gateway status. The result, a new era of economic competition within North America. The ripple effects are just beginning. Both countries must adapt to this evolving landscape. For the seven nations, diversifying trade through Canada enhances economic resilience and reduces risks tied to US policy shifts and logistics. Japan, for example, now bypasses US port congestion and tariff threats by using Canadian routes. Germany values Canada's alignment with its sustainability and labor standards, making it easier to meet ESG requirements. Brazil and India gain secure access to a high-income market, fueling export growth. The UK's deepening ties with Canada are central to its post-Brexit strategy, benefiting its service and financial sectors. Transitioning to Canadian trade routes requires adaptation and investment, but the long-term benefits of stability and alignment outweigh the initial costs. The consensus: Canada offers a more reliable, strategic trade partnership for the future. In summary, 7 major nations are deliberately shifting trade from the US to Canada, seeking stability, predictability, and alignment with modern priorities. Lingering concerns over US policy volatility and logistics contrast with Canada's stable governance and robust trade network. Key sectors, EVs, agribusiness, and critical minerals, are at the heart of this new dynamic, with Canada emerging as a global hub. The shift boosts Canada's economy and status, but strains its infrastructure, while the US faces new competition and must adapt. The 7 nations are building more resilient supply chains and pursuing growth aligned with ESG standards. The North American trade map is being redrawn, with intensified corridors running through Canada. The long-term consequences are still unfolding. Are we witnessing a temporary shift, or the rise of a new economic gateway to North America?